All right, welcome everyone. We are ready to get started with must-have financial information for CAA boards and CEOs. That is with Kay Sohl, which I'm sure is a name that you have probably heard throughout the years. She has done a fair amount of work for us at the partnership as well as at CAPLAW and NASCAP events. Just a guru on all things finance and governance. So a fantastic resource. We're glad to be able to pull her out to our conferences. She is going to be with us in January at our Management and Leadership Training Conference in California, Southern California this year. So hopefully you will be able to catch the live show. But with that, we do like to use her for written materials and for webinars to try to bring this expertise out into the field, because we do recognize that not everybody can travel, and that she has so many things in her areas of expertise that we can't fit them all even into a conference. So spread the learning throughout the year. But with that, I'm actually going to hand it over to Kay and let her take it from here. Kay?
Okay, well, thank you, and I am delighted to be doing this webinar. This is one of my favorite subjects, and of course, community action leaders are my favorite people, so I've got a great combination. And actually, we're going to start out with a poll right away so that we can find out who's on this call, and that will help me focus a little bit the slant of what we're going to talk about. So, Cashin, can you go ahead and show our poll? And we really want to know from each of you, what is your role in community action? And you can see our choices there. Now, while you're working on responding to that poll, and Cashin's going to let me know when when we've got enough responses to think that we might know what we're talking about, I think I'm going to be able to actually move us on to another slide. Maybe not. No, I'm going to wait. But what we're going to be talking about is the reality that when we talk about must-have financial information, we are really talking about a bunch of different audiences. And so as we go through the slides today, we're really going to try to hone in on what is it that the board needs to know, what is it that management must know, and of course, what do auditors and monitors need to know, because we really have three distinct audiences and then some sub-audiences. Well, okay, do we have enough responses there to see who's on the call with us?
Sure, the poll is officially closed. It did look like there was a last-second response right as it closed, so we'll try to grab that and get it into the count there, and then we should be able to share that for you momentarily.
Okay. Well, there's the answer. It looks like we're mostly executive directors and CFOs or fiscal directors, but we've got some representation of the other groups as well. But this is the audience I wanted, and where we're going to go with this is to get started and say that it probably is most helpful to start by thinking about some contrasts between the role of the board in community action and the role of management. And this is my slant, but I think it's being affirmed all across the country that we have to have boards of directors focus on the sustainability of our organizations. They are the people who have to make sure that our community action agency is capable of continued operation and of getting additional funding, because our needs are so severe at this point. They are also held accountable not only by your funders, but by state law and by the IRS for ensuring accountability, making sure that the organization operates lawfully and that it complies with its various agreements. Now, most of us would probably agree that the single most important decision that a board has to make is the selection of the executive director, and part of that decision is the retention and the continual evaluation of the executive director. Now, you might wonder, why am I emphasizing this on a workshop about finances? It's because I've found in many community action agencies that there is some confusion on the part of the board about how much of the responsibility for detailed financial management and specifically for compliance lands with the board and how much lands with the executive director and the managers the executive director pulls together as a team. And I think if we can move in the direction of realizing that the key issue for the board is holding the chief executive accountable for sound financial management, for sound financial outcomes, and for compliance, that they can move into a more appropriate board role, which really is the sustainability role, the strategic planning and direction setting role, and determining risk tolerance in the agency. And now we're going to mention again that in community action and in really all nonprofits, the board must authorize the budget. So they do have a very detailed responsibility there. But the key issue is understanding that management has to be responsible for the things on the other side of the page. It is management's job to ensure compliance with the contracts, to be sure we have accurate accounting, to control costs, to manage cash so that we can pay our bills on time. And in most cases, boards are going to need to rely on management to develop financial strategies for the board to evaluate and to identify risks and then manage those risks. So we have different roles, and it's probably not surprising that we're going to need to have different information available. And that brings me to sort of stepping back and saying, well, financial info, financial information systems, what are we really talking about? Well, I am thinking of this in a holistic way and thinking of your financial information system as including your annual budget. We're going to say more about that. Including your general ledger accounting system and structure, including your financial reporting to all these different audiences, and also including your internal controls, because no one wants to be reading reports that are not reliable. So that's what we're really talking about, and we're going to talk about how all those elements of the system have to work together to get people the information they need to fulfill their role. Now, I have found in my years of working with community action that many of us have really focused our financial information systems on meeting the needs of auditors and also compliance monitors, funding monitors. It's not surprising. If we don't meet their needs, we're going to be in deep trouble. But I want us to spend some time today thinking about whether simply meeting their needs is enough. And here's a clue. I would say it absolutely isn't. Why is that? Well, when we design information systems for auditors and compliance monitors, we're going to focus on grant and award tracking, on expenses that were recorded in the grant period, on comparing those expenses to the grant budget, and on tracking allowable expenses. Essentially, we're focused on defending the amounts that we are reporting to these various funding sources as being allowable and documented and properly recorded. Now, there is nothing wrong with having systems doing that. In fact, we need our systems to do that. It's just that there's some things missing if that's how we focused our systems. And what would we say is missing? Well, I would start if all you've got is a system that gives you a whole stack of reports on each grant, maybe showing you the current month's expenses, the grant-to-date expenses, the grant budget and variances. If that's all you've got, that is not useful information to be monitoring and understanding your overall financial health. It's probably not giving you a really clear picture on the agency-wide income and expense. It may not, and in many cases doesn't, give you good information about your cash position. it doesn't really show you the impact of your cost allocation policies, and it really may not be showing you the impact of certain costs being unallowable but still being necessary to carry on your operation. So where does that leave us? Well, it leaves us with an understanding that while in the past our funders used to tell us, well, that's all I want. I just want to see this report where I can see that you tracked my money coming in and you tracked the line items that were in the budget and that you only charged allowable costs. And now we're seeing a real shift, and we saw it with CSBG, with the organizational standards saying, you know, you've got to have the board approve an organization-wide budget that includes all sources of funds and all uses of funds. And we know that it's gone even further than that when we read the uniform guidance, the super circular, and see the discussion that says that a funder may consider an organization's overall financial health as a critical factor in making a decision about further funding for that organization, and a critical factor in determining what type of monitoring and other constraints can be put on that organization. So even our funders are moving away from this sort of slice and dice emphasis on grant reporting. So I guess the question is, where are they going? Well, they're saying in that requirement that the board approve an agency-wide budget, they're probably thinking that you are now doing a budget format that isn't just a single column that goes by line item and instead is presented in a cost center format. And if you just look at this sample on the screen, you know, I made it kind of simplified, right, because it's always hard to see things on your computer screen. But I'm also making it kind of simplified as a suggestion that while I know if you're doing homeless services, you probably have multiple programs that provide homeless services, and you probably have multiple grants and awards that are paying for it. Does your annual budget include all those? Absolutely. Is it on a supporting worksheet, not on the cover page that the board is going to look at? I hope so, because I hope you've been able to get your annual budget down to one page so the board can get the big picture while still understanding where you're getting money and what you're using it for. Now, we're going to say a few more words about that, but many of you were with us earlier this fall when we did a session on organization-wide budgeting, and so I'm hoping that you will be able to refer back to that, and I know that those slides are up on the partnership website. Now, as I was getting ready for this session today, I thought about trying to find a metaphor that would explain the essential issue that we're dealing with. And I really think an onion gives us a good image. Now, I know some of you who don't like finances too much probably say, yeah, it stinks, but that's not the comparison that I have in mind. You know that when we are trying to buy an onion in the store, we generally want to see the whole thing. Individual layers are interesting. We're going to slice them and put them on hamburgers, but we want to see the whole thing to see if there are any soft spots or bad spots or mold. And that's really what we're after. And you also know that when you have an onion, you can slice it in many different ways. And that's also what we're going to be talking about when we think about our financial information system that we need. So inside your onion of financial information are the individual grant award agreements. And at another layer, there are programs that are supported through multiple grant agreements. There are also program expenses which end up having to be met with your unrestricted funds because no funder will pay for them. And there are the most problematic layers of all the support functions, the management costs, and if you do fundraising, also fundraising costs. And there's a lot of difficulty in making sure that we're going to get a funding award to pay all of those costs. And for many of us, the outcome of our efforts is we can't get our funders to pay all of those costs. So we have to be able to look at those individual layers and figure out what we're going to do about it, and then we have to report on them. Now, when you're building this annual budget, and you're going to say, why is she talking about budgeting when we want to talk about accounting information? Because this is the first step in the system, and whatever we say about organizing information in the budget is going to be paralleled in what needs to happen in the accounting system. So in that first slice of preparing the annual budget, you're going to figure out what portion of each of your awards is actually going to happen during this fiscal year. And I'm going to bring us to a picture here to illustrate this. So if I'm looking at one award, I know what the total award budget is. I can know also what portion of that award we actually used in our prior fiscal year. That's going to lead me to the portion that we can use in this current fiscal year. And if this is a multi-year grant, there's going to be some portion that's going to have to wait till next fiscal year. It's that current fiscal year portion that is going to go into our agency-wide budget, and it's going to be that current fiscal year portion that we're going to use to make comparisons with when we get into the accounting system and the reporting. So we're building the budget from the bottom up, and our goal in pulling it all together, not just one grant, not looking at grants as stacks of paper, but instead looking at them as the whole plan, is that's how we're going to see whether there is any distortion in our cost allocation approach. Now, we know this happens because certain funders will not permit certain costs or impose arbitrary limits on things like administrative costs. Now, we know the uniform guidance is trying to deal with this indirect cost issue, but my guess is we're not really going to see the full-on implementation of what they're trying to do for another year or two, and so many of us are going to continue to have the problem that we have historically just decided to not charge awards that won't pay certain costs. And of course, the question is, if we're not charging the fair share of a cost to a specific award, what are we charging it to? And I can look at grant budgets and reports against grant budgets forever and ever and still not understand how we're actually paying for the costs that our funding awards do not cover. And that is what we're looking for in the annual budget presentation. Which of all these costs are we having to pay with our own unrestricted funds? And we're going to look for that same information when we move into the accounting system and the financial reporting, because that is going to be a question that is essential to our financial health. Okay, well now I've said quite a bit about the budgeting. Now I want to take these concepts forward and apply them in our accounting and reporting to talk about the information that we want to be able to get out of those systems. Now, you know, again, that onion metaphor, we do need to see the slices, we also need to see the whole. So of course, we know, we're all great grants managers, right? We know you have to have a line item record by expense and by income, tracked by grant award or contract, tracked by program, tracked by division if your organization is large and has multiple divisions. At a minimum, you would have a division that reflected your management and another one that reflected all your programs. And finally, we need to be able to see it for the agency as a whole. Now, let's talk about what we're going to do with this information after we have actually correctly accounted for it. And what we know is that if we designed our chart of accounts, the actual system that we use to record income and expenses and other financial information, if we designed it to parallel the structure of our budget, then it's going to be possible for a manager to do a grant-by-grant review. And what I mean by that is they're going to look at what expenses did we actually have that were charged to this grant or award, what was the budget for this fiscal year for that grant or award, and how do the two match up. And, you know, this is probably one of our most essential controls because it's through this detailed comparison that we most often detect accounting errors and can get them corrected. And of course, it's also through this detailed monitoring that we're able to see whether we are in compliance with our agreements and we're producing the information that our funders want to see. What may happen as a result of this detailed grant-by-grant monitoring is that we can recognize the need to work with our funder to get a budget revision because sometimes, despite our best planning, our costs just don't end up matching up with the budget. And, of course, even the newest grant manager or program manager with a grants management responsibility knows that they have responsibility to avoid over expenditure. Sometimes it takes them a while to understand why they also have a responsibility to avoid under expenditure. So yes, this is absolutely essential information that we get grant by grant. And for many of us, what we start out with is a fiscal year report. So when a grant-to-date report. And this involves systems that permit you to go back into a prior year, take the costs that were already recorded to an award that began before this fiscal year, add them to the costs that have been recorded for that grant in this fiscal year, and come up with a grant-to-date income and expense, compare it to the grant budget, and hopefully require your grants manager to project how this grant is going to end up. Are we going to be able to end up in compliance with the budget, or do we have a problem? So that's one form of report that is very useful to a program manager or a grants manager. I'll just preview what I'm going to say later. It's not very useful to the board. This is really too much information, and it's not in their purview. Now, let's look at the information sliced a different way. This time, we're actually looking at the grant year-to-date information compared to the grant budget for this fiscal year. This is the slice that is actually part of our overall financial statements for this year. And this report is really critical because it's going to help us understand if we do that year-end projection. If you think of a stack of, some agencies have 20 grants, others have 80, others have 120. If you think of a stack of those grant reports and you project how you're going to come out on each of those grants, you're going to come to a projection for the whole organization that will be very helpful. So, let's think a little bit about what we're hoping readers are going to get out of looking at those grant reports. Well, they're going to get information about over expenditure or under expenditure line items, and hopefully you have a structure in your organization where the information about how things are going on these individual grants is coming up to top management so that they can understand the overall income. We may or may not be getting useful information about how we're doing on the income side of these grants. Now, that gets into some technical detail about how you are recording grant income. But let me just raise a red flag because we're going to hear about it later, and that is if you have some awards, some grants, where the actual amount of money that you're entitled to get from the funder is not based solely on what expenses you can charge to the grant, but is based on units of service or some other performance measurement, then you want to be sure that in your accounting system you are doing an accurate recording of what you have earned each month, not just dividing the grant by 12 or assuming that you are earning whatever the expenses were. That goes a little beyond where we are right now, but I just want to raise that red flag for you. Because the real point, and where we're really going, is that this grants management information that we've been talking about, while essential, it's not sufficient. And that is because we need to be able to understand what the impact of all of our activity, all of our grants activity and our activity that is not funded by grants, what the impact of that is on our whole organization's year-end outcomes. What do I mean by that? Are we going to run at a surplus or at a loss? And once we understand that it looks like we're heading for a loss, for example, we need to be able to dig in and find out, well, why is that? Where is that loss arising? Is it coming from a particular program? Is it coming from a shortfall in the generation of unrestricted income? So we want to have the big picture, and in these agency-wide reports, we want to see the impact of those funding mechanisms, those pay-for-performance or unit of service agreements. Now, part of what I think confuses this whole discussion is that we call the same set of information by so many different names. Now, when you look at your audit report and you see the report that has the revenues and expenses, you can be sure that you're calling it the Statement of Activities. That's the formal GAAP accounting name for it. But internally, many of us would call this report the Income and Expense Statement. Some of us would call it the income statement. And some of us would refer to this as the budget report. And that's actually a little bit of a misnomer, because while this report has the budget on it, it is actually a report about what income we actually earned and what expenses we actually incurred. But whatever you call it, you want to be sure that you as the executive director and your board are getting an agency-wide version of this statement that shows all of the income sources and all of the expenses and the net income or increase or decrease that has resulted. So we have another poll for you that we want to take here, and this is one of those be honest ones, because nobody knows who's answering. We want to know how many of you do give your board, or at least your finance committee, an agency-wide income statement every month. This would be the report that shows all of the income from all sources, all of the expenses from all different programs, grants, unrestricted, everything, and then the net income. So if you will let us know what's what with your organization, if you are doing this, that would be great. We're going to be looking at some sample income statements, and I'll say while we're taking the poll that part of what I think really helps not only the board or finance committee, but actually helps the executive director understand the agency-wide income statement, is to get to a format that can be printed on one page. Now, you're going to have to go to more pages and more details to really understand what lies behind that one page. But again, this general rule that we can't take in more than one page worth of information and understand the whole. Well, it looks like we've closed the poll, and how are our results coming? Are they about here now?
Yes, we were, again, capturing a late person in there, but we are tabulating now and should be able to share.
So maybe we're going to be at 100%. Not so much. Okay. Now, some of you did not answer, and we have another poll coming up, and I want you to answer that one. But I'm going to go forward saying I think this represents progress, that we have 17 people saying, yes, they are seeing it each month, and we still have some that there are some questions about. So let's take a look at one sample of a community action, one-page statement of activities. And this one is for the 6 months ended March 31st. I got this from someone who really helped me out in a community action agency. And you can see the nice clean presentation of the revenue line items. And you'll notice that what they decided to do in presenting the expenses is not a line item presentation, but a presentation by program, and also then the fundraising and administrative costs. And they use the formal language change in net assets to mean net income. That's the way we say it in the audit. And this is a high-level summary that is showing how they're doing. They're doing you know, not too bad, I would say. They chose in this one to use in the third column the variance, the difference between the budget and the actual. Some of us like to use a percentage, some of us like to use both. Now, at the end of your packet, you will have gotten a whole set of samples, so don't worry if this looks a little small on the screen. I think we've got a better version for you. Some of you have seen this sample before. This is for those of you who are dealing with a lot of temporarily restricted activity. This is another way to present the statement of activities. What I really want you to notice on this one is the fourth column over. And this is an idea that I think is catching on. I'm a board member, so I find it very, very helpful to have management start at those basic slices of the onion, program by program, grant by grant, projecting. I know what we have earned already in this program. I know what the expenses have been so far in this program. Tell me what you think it's going to be by the end of our fiscal year, because it's that end of the year outcome that matters most to me as a board member. So this one has accumulated, totaled up, all those detailed projections, grant by grant, program by program, division by division, to give me a year-end projection. Do you do that for the first 2 or 3 months of the year? Probably not. Probably start working on this on, I'd say, the 4th or 5th month. That's when we have enough information to begin taking into account what's really going to happen by the end of the year. So what is it that we hope readers are going to learn from this agency-wide statement of income and expenses? Well, they for sure should be able to see the net income. They should be able to see whether we're under or over by cost center. I really like to give them some detail in the income section because they need to pay attention to shortfalls in anticipated income. And they need to understand whether we're going to have an unrestricted loss, which may arise from having expenses that can't be charged to any particular grant agreement. So what that comes down to is aiming for this format of report. Now, I guess sometimes people say, I know people think we should give this to our board or to our executive director, but why does it really matter? Why can't they get what they need by looking at individual program reports? And I would say because most of us just can't mentally integrate 80 different grants. We've got to see how it all goes together. And I think the other thing for the CFOs in our group, this is where if you're looking at it, you may begin to see some of the inconsistencies in your cost allocation. And ultimately, I hope you will come to a format that calls out the use of unrestricted funds. And we're going to say more about that in a moment. Now, so there's a lot of different formats, and these slides are, highly summarized to make them fit on a computer screen, but you understand that we would have some line items under the title expenses. I actually think this format is very helpful to boards because it allows them to associate the income with the program and see which program is contributing positively to our net income and which may be actually not helping our net income situation. This is another sample from a community action agency. I really liked this format for presenting this information, and I think that it really gives people some critical information in a one-page example. Now, what it really comes down to that we're going to see in these next two slides is that one format for presenting the information organizes the expenses by program. And I actually prefer the format that we saw a little earlier that showed the income by program too. But what this format doesn't do is show people line items. Now this next format is kind of the traditional line item format. The problem is that if you carry this format out to all of your programs. In other words, remember we saw that example where we had a functional income statement that showed management, fundraising, homeless services, energy assistance, and all our other major programs. If we're going to display that information and also display line items, what's going to happen is we don't have space on a one-page report to compare to budget. If we move to a format, I'm now going back, where we're looking at the expenses summarized by program, then we have the space to do a budget comparison that is meaningful. And what I'm getting at here is just a question for you to think about. How meaningful is it to a board member to know that there is an overage in supplies in one program? I would say it is not meaningful information. If there is an overall overage in a program where we're spending faster than we should be, that is useful information. So a lot of this comes down to distinguishing the audience. Now, you know, if I'm in management, I have to pay attention to the line items. I got to drill down and understand where any over expenditure or under expenditure may be happening. But when I'm at the board level, I would say we want to give board members a high-level understanding of what's going on in the programs, and where we really want to place our emphasis is on helping them understand the limitations of a funding source for paying the full cost of a program, or the effect of unanticipated costs and uncovered costs in a program. So, you know, we've been talking about income statements, and we could talk about them a lot longer, and there are more samples at the end of the packet. But I think we have to understand that even having the most perfect income statement in the world is not going to give all the information. It doesn't give us all the must-have information. It doesn't tell us whether we have enough cash to pay our bills on time. It doesn't tell us whether we are paying our bills on time. It doesn't tell us whether we're having delays in collecting what's owed to us that might actually be some red flags. It doesn't tell us whether we may be using our restricted funds inappropriately, or whether we have unrestricted reserves to cover what the restricted sources won't pay. So there's a lot that it is not telling us. And that comes down to why we need the other essential statement. And it's another statement with many names, and some people call it the balance sheet. Some people call it the statement of financial position. Some people call it the statement of assets and liabilities and net assets, because that's what's on the statement. But whatever you call it, we know that it has absolutely vital information for the executive director, for the CFO, and especially for board members. So I've just put up a sample balance sheet or statement of financial position, and you'll notice it has the assets listed, the things of value that we own, the liabilities, those are our debts, and then it has the net assets, and it has them broken down into unrestricted net assets and temporarily restricted net assets. This information does answer the questions we were just talking about. And I want us to hone in on one particular part of the balance sheet, which is the analysis of what's in our unrestricted net assets. Even though our goal is to get the balance sheet down to a one-page format, just like we tried with the income statement, this is an area where I would not hesitate to take up some space, because I think it's very important for board members to understand what's really in our unrestricted net assets. Why is that? Well, I've worked with too many community action agencies where the total unrestricted net assets is still a positive number. But when you break out the portion that's available for operations from the portion that's invested in fixed assets, that's what we've invested in our buildings and equipment, we find out that actually we are in a negative net asset position in the available for operations. That literally means that in order to pay our bills, even if we collected everything we were owed, we would have to put debt on our building if we were allowed to, or sell it in order to pay bills. And this has happened in community action. So it's not a sort of idle worry. This is something real that every board member should understand what's in your unrestricted net assets. So what is it that we're trying to help readers get by reading a balance sheet? Well, we want them to understand which of our net assets are unrestricted, meaning that our board controls what we do with them, and which are restricted, meaning that we have limitations placed on the use of those resources by our funders. We have to understand whether our net assets are growing or shrinking. You know, one of my favorite community action agencies actually got into that negative net assets available for operations, and they didn't realize it because they weren't tracking onto the balance sheet the growth or the contraction. We also want people to see our cash position. We want them to see our liabilities, to see whether we're paying our bills on time. We want them to understand about our accounts receivable, and I'm going to come to why that can be an important issue, certainly for the executive director. And if the executive director can't resolve it, it becomes an issue for the board. And of course, we have to see what our investment in fixed assets is. Now, I think a lot of board members have confusion about the difference between the income statement and the balance sheet, and I think they really are wondering, why are you giving me these two different reports? They seem to have some of the same words on them, but they don't have the same numbers. This is just confusing. And I think sometimes it's helpful to explain to them that what we're really doing is talking about the distinction between a pathway and a destination. Now, the balance sheet is reporting at where you are at one point in time. So it is the destination that you have arrived at. The income statement is reporting on the activity that took place over a period of time. It could be a month, a quarter, the year to date, what happened during that period. That income statement is the path we took. We generated income from these sources. We used our income. We had expenses for these purposes. The balance sheet tells us where we got, where the path took us. And we need both. We need to understand both where we are, our destination, and how we got here, and that is revealed on the income statement. Now, a lot of board members feel more comfortable with the income statement because it has revenues and expenses, and they spend a lot of time on the budget talking about revenues and expenses. so they're more familiar. But it really doesn't do any good to only look at the pathway. You have to look at the destination. Now, for some board members, this helps to think of it as two related equations. We know that revenue minus expenses gives you the net income. If you look at your opening net assets, your beginning net assets, and you add the net income for the period, then you're going to see the ending net assets. So, looking at that bottom line, opening net assets is where we started from. Net income is the pathway, where we went and sort of how we went along. And then the ending net assets is the destination. That's where we are now. But for most board members, simply looking at a column that has the assets, the liabilities, and the net assets for whatever month end we're at, it doesn't help much. And actually, as an executive director, it didn't help me very much either. I had to have some useful comparison. And so some of us like to do comparisons on the balance sheet with prior periods. Where were we at last month or last quarter or the end of the last fiscal year? Some of us find ratios helpful, how one balance relates to another, and I'll talk about that in a moment. Some of us who, love the simplicity of looking at an income statement where we compare expenses to the budget, we like the idea of targets. And so I'm seeing more and more boards and executive directors work on targets for the balance sheet. So let's look at how that plays out. But first we'll talk about the prior period comparisons. And I think the common ones are to compare, now remember we're talking about the assets like cash, accounts receivable, the liabilities like salaries payable, accounts payable. So some of us would like to compare that to the prior month, prior quarter. Some of us use this same month previous year because that's what our software spits out. I'm very skeptical about the value of that. In community action, we have too much change in the nature of our operation every year to really find this helpful. That would be helpful in an organization that has tremendous seasonality, nonprofits that operate summer camps, huge seasonality, but I would say that's not often helpful in other situations. So when we're talking about a prior month comparison, this is what it would look like. Now, some of us would take that a step further, and we would put a percentage of change or sometimes a variance. That can be helpful when you get down to things like cash. Did it go up or down? Accounts receivable, did they go up or down? That can be very helpful. Now these ratios, let's talk a little bit about this. Sometimes board members ask for this because it's very commonly used in business. And so here are some of the common ratios that are used. I actually have a slightly different way to think about cash that we're going to talk about in a moment, but some people like to compare it to the current liabilities. That is useful. If I look at your balance sheet and I see that you've got $10,000 in cash and you've got $200,000 in salaries payable, and I know that this was at the end of the month, I am a little bit worried about how you were going to meet that payroll, so it could be useful. As a board member, I do look at this third bullet, and as an executive director, I looked at it a lot, and that is looking at our grants receivable in relation to 1 month's billings. Now, what am I talking about here? Let's imagine that we're in an organization that every month sends out invoices to funders requesting reimbursement for $1 million from our various programs. If I look at the grants receivable on the balance sheet and I see that right now it's at $3 million, that tells me that our funders are delaying paying us so that we're carrying them for 3 months worth of billings. That is a red flag item, either because we need to talk to the funders about the promptness of their payment, but actually, in reality, it's often a red flag about our systems. It's often indicative that we're being slow submitting those invoices, or that there is a problem with the invoices. So one of the ways to spot problems is to look at that as a red flag. Now, the targets. I mentioned that I'm not a huge fan of the cash compared to current liabilities. I am a big fan of days of cash as a target. Now, days of cash, you can read all about how to do this in some webinars that the partnership has on dashboards. And the essential idea is that you figure out the average cash demand for a day, or you can do this for a month, and approximately how much cash has to be available every day to meet 1 day's expenses. That's 1 day of cash. Then we can set a target for how many days of cash we want to have on hand at all times. A lot of us would say, well, I want 60 days cash on hand at all times. Your target would depend a lot on what portion of your income is coming through direct federal awards that you can just dip into the federal treasury whenever you need cash. If you're an organization that has a relatively small portion available for that electronic transfer from the federal treasury and a much larger portion of your funding coming through various state and other awards that are on a reimbursement system, then you probably want to have a higher days of cash. And I've mentioned some of the other targets that I think you might want to set in terms of net assets. And setting a target for unrestricted net assets is a very important discussion for a finance committee, because it really, in the end, is going to be giving you financial strength and also giving you some flexibility to go ahead and sustain programs when you have interruptions in your restricted funding. Now, the whole point of getting both the balance sheet and the income statement is to be sure that as an executive director or a board member, you can spot trouble before you're cooked. And we really are in a situation of, the story about the boiled frogs, that the water just gets warmer gradually until they're cooked. And that is what has happened in some of our community action agencies. How does it happen? Through the gradual erosion of their unrestricted net assets by operating programs where the grant funds are not able to cover all the costs. It happens by not paying attention to their cash position and getting into situations where they simply cannot meet their obligations on time. It often happens by having uncollectible receivables. These are these amounts that we've invoiced to the state or our other funders, and they don't seem to have paid us yet. And we fail to investigate and find out that actually they're not going to pay us because they have a problem with that receivable. Negative unrestricted net assets may, in the end, cause us to get scored lower on a competitive grant application. That's in the super circular. And of course, we want to spot the trouble of cost overruns and income shortfalls as quickly as we can. So we're looking at the statements to avoid getting cooked. Now, I want you to just take a few moments and look at this statement, and I hope you can actually see the numbers. And this is drawn from a real community action situation. And what I want you to look at is that they have some serious problems here. And I'm looking at time, and I'm actually going to go ahead and tell you about the problems, but challenge you to go back and look at this statement and see if you could have seen all of the problems that were presented in this one balance sheet report. These folks had actually overdrawn their bank account. Now, why wasn't the executive director and the board immediately aware of that? I'm going to try to use my tools here, but I'm not doing it. Let's see if I can get it. No, I'm not going to succeed in using my tool today. But in the cash line, everything looks good. The problem is when you go down to the liabilities section and you see that first line in the liabilities says cash overdraft. That's bounced checks. So that's one key item in this statement. Another thing, if you look at it closely, you would see a big increase in receivables, needs to be investigated. You would see a big increase in liabilities, not surprising if they're already in an overdraft position, and you would see a drop in net assets. All four of those problems, terribly serious problems, not accessible. The information would not have been available through the income statement, only through the balance sheet. Okay, well, let's step back and think about the needs of the board. The board has these core financial concerns: financial health and sustainability, progress towards your goals, and risk management. So we've got to give them the information that they need to evaluate what's happening towards those goals. So there's our sample income statement, again, highly condensed. You would actually show something under both income and expenses. And I'm actually suggesting that you consider giving your board a projected year-end balance sheet. Why would I suggest that? Well, because when I sit on a board and I am seeing our net assets plunge during the year, my big question is, are we going to come back out of this by the end of the year? A couple more things I want to show you, and then I want to take some questions and see what you're doing in your community action agency. I think that what we're really all needing to do is help our board understand the financial health of our community action agency. I know that a board cannot understand that if they are not getting an agency-wide income statement and a balance sheet every month. But just getting the piece of paper doesn't really solve the problem. They have to be able to understand it. And I think that the key to getting them to understand it is both really cleaning up the presentations that we're using, following the one-page rule, following the lots of white space rule, figuring out meaningful summary ways to get this information in front of them. But for most of our board members, there's going to have to be some financial oversight training that really clarifies their role as distinct from management's role. And I find that this is really a tough one because many board members want to be diligent. They really are concerned about providing effective oversight. They're just not really clear on how to do it. And I think that part of what we can help them with in a financial training is to really grasp what the key indicators of financial health are and what the indicators of risk are. Several years ago, I worked with a community action agency that had actually reached the point that within the next week, they were going to be unable to meet their payroll. A terrible situation. That board met every month, and the board members were completely unaware that this was coming. The executive director was relatively unaware of the severity of the problem. How was this possible? Well, it really came down to that was an organization that was giving board members 30-page financial statements that went grant by grant by grant. And of course, they followed the rule that you can only charge allowable expenses to a grant. And so the expenses reported on those reports on a grant by grant basis always matched up pretty well with the budget. What they weren't getting in any clear format was a report of the expenses that were happening but were having to be met with unrestricted funds. And even when they saw that report, because they were not seeing the balance sheet, they were not understanding the impact of having expenses that they had no new unrestricted funds to cover. So over the course of more than a year, they had eroded their unrestricted net assets. Now, what happened to their cash and why didn't they know about it? Well, they had gotten into a situation with the state where they were not receiving their reimbursement requests on time. In fact, the state had fallen about 4 or 5 months behind, and they had failed to investigate that situation other than to complain about it. When they investigated it, they discovered it was because the state had been communicating with a program manager, not with the executive director, not with the CFO, about a problem in the actual earning of the income. That particular award had switched to a mechanism where the amount of money that you were entitled to earn was not based solely on the expenses incurred, but by the volume of service provided. They had fallen behind in their volume of service, and the state was refusing to pay invoices until they became current. They said, we started out dividing your contract into 12 equal installments and sending you 1/12, but by the end of the first half of the year, we realized you hadn't earned half of that award. Now, should the program manager have reported that up the line? Of course they should. But if you were the executive director, wouldn't you like to be able to read a report that would have triggered your investigation and identified the risk that something was really wrong? So we need help for both the board members and the executive director to learn to read these financial statements and spot the red flags, identify the risks. Now, I think the other piece of this, if you're going to try to improve your board's understanding, they're going to turn to you as management and ask you to not only point out the risks, but to propose solutions. And I think that is your job as management, and you really want to be sure that you are aware of those risks and ready to propose the solutions. And that brings us to the bullet point narrative, because I think many board members just feel overwhelmed by the volume of detail they are given, and they really don't make sense of it. And if you're having those board discussions where the board is going into real nitpicking detail about, well, why over here in this contract in our homeless services are we over our budget by $10? That is not a board level discussion. That is a board member frantically trying to make sense out of information that is not the whole onion, not the whole picture. You can help with a bullet point narrative that points out the most important information. You might also want to think about a dashboard approach in addition to providing the income statement and the balance sheet. What's a dashboard? Well, it's kind of a fad, but it actually can be helpful. These are graphic presentations. They usually emphasize comparisons, and the important thing is that your finance committee, as well as your management team, has really honed in on what are the most significant indicators. And so, here's a sample balance sheet, and again, a sample dashboard. And again, if you're interested in this dashboard concept, you can download a series of trainings from the partnership that really will take you step by step through the development of the dashboard. But I just want to talk about some of the indicators on this dashboard as an example of what I consider to be must-have information. This top square is tracking the unrestricted net assets by fiscal year, and that downward trend on the graph says a lot. And remember, that's what we're trying to do with these graphics. We're trying for a kind of at-a-glance communication. Now, this one, they are using the days of cash method, and they're communicating a lot in a small space. the board had actually set a target for days of cash. That's the red line. And what the blue line is showing in the solid part is, well, what has it actually been? And in the dotted blue line, they're showing what are we projecting to the end of the year. So this is a good news chart. But the interesting thing is it's much more meaningful than showing a board a detailed cash flow projection. That's a management tool that we all need in our management information. But for the board, it's really, they want the big picture. They want to compare how are we doing compared to what we're trying to do. Here's another example looking at net income by fiscal year. And this organization actually had gotten involved in fundraising and had put an emphasis in their strategic plan. I'm seeing this more commonly in community action where boards decide, hey, we really are going to try to raise money from individuals. If you're doing that, it's new. You got to pay a lot of attention to it. So they're graphing some of the key indicators of progress on their fundraising. The other thing they're doing here up at the top is using what's called the stoplight metaphor, red, yellow, green, to look at their different program results and characterize them as either green, nothing to worry about, yellow, we have a little bit of concern, red, there's really something to worry about and investigate. And sometimes this says more than pages and pages of information. This is another example of some types of information presented in a dashboard. Down there in the program indicators, one of the things I like about this is that, you know, this is not financial information. This is performance information. If you're moving increasingly to contracts and awards where there is a performance requirement, this may be the vital information to get on your dashboard. Well, I'm watching our time, and I want to leave time for questions, so I want to sort of close with asking you to do a little bit of thinking about what all this might mean in your organization. I hope you already have developed a comprehensive, integrated fiscal year budget that pulls all the different grants and awards and funding sources and all the plans for what you're going to do with them, as well as the plans for both how you're going to get unrestricted income and how you're going to use it all together in an easily understood presentation. If you want help on that, there is a recorded webinar that you can look at the partnership. I hope that you've been able to structure your accounting system to match your budget format. So whatever ways you've been looking at things in budgeting, you're going to track them the same way in the accounting system. If not, that's a great discussion to have with your fiscal director. I hope you are producing a useful organization-wide revenue and expense statement, and I would challenge you to look at the length of that statement and think about whether getting to a one-page format could be helpful, and if you decide it is, to think about how you might want to do that. Would you want to emphasize the program-by-program totals, total income by program compared with the expense of that program and a net income from that program? Would you want to do it in the line item format, personnel, occupancy, supply? So think about the format. I'd also challenge you to think about the layers of the onion in relation to this revenue and expense report, and to be sure that what program managers are getting is not only the award by award report, they have to be able to see that, but a report that shows them their total program results, What are you responsible for if you are the Director of Homeless Services? Well, you're probably responsible for a number of different grants that are funding those services. You're going to need a report that shows the expenses charged to each of those grants and also shows the expenses that were incurred to do your homeless service program but could not be charged to any award. So hopefully we're giving our program managers the information they need. This whole webinar is one running commercial for a balance sheet, and here you'll see I'm hoping that you are presenting a comparative balance sheet. That's one that compares the end of the current month to a prior period so that we can see the trend, not just the raw numbers. And I hope if you're interested that you will do a little bit of thinking about the dashboard concept. This is a concept, I've got to say, where less is more. Fewer dashboard indicators rather than more. How to get the benefit of the dashboard. And with that, I'm going to stop talking and actually see if we have any questions in our last few minutes, and also see if you want to follow up with emails, because I'm happy to answer questions. I think in your packet you have some full-size samples of some of the reports we've looked at. Okay, well, have we got any questions, Cashin?
We have an unusually quiet for community action kind of day.
Really, so, very, very quiet.
So if there's any questions, do of course go ahead and get those in. We will try our best to fit them into the time frame here. And as Kay mentioned, if you come up with questions after the fact, please don't hesitate to find us here at the partnership. We'll answer as best we can or get them forwarded to Kay to try to get answers for you. So it's not by any means your last chance to ask questions. And again, as noted, this was recorded, so you will be able to play back this webinar. And we did email out both the slides and full-size examples that were referred to. So encourage you to use those materials once they're up. The recording will go up in the next day or two. There will also be an evaluation that will come up at the end of this webinar once we close out. We do appreciate your participation in that. Let us know what you thought about today's event and what you'd like to see from the partnership going forward. What are your needs? Tell us what you'd like to see in a webinar format. It does look like I have a question or two in, so we'll try to see what we can do here. It says, I always match revenues to expenses for each grant and record the receivable or deferred revenue. Therefore, net assets on the grants are zero. I'm concerned about your dashboard using net income. Wouldn't using cash or balance of total grant be better?
Well, I don't think that, I do think cash is always a great dashboard thing because really days of cash is important. I think in the example that you just gave, this is the typical thing that we only charge expenses that are allowable, right? So, of course, each grant is going to come out to a net of zero. So the net income that I am really interested in is the net income in the unrestricted funds. It's not about the grants, although it could be about grants where that example I gave about the organization that had failed to grasp that their funder now considered that simply incurring expenses was not going to result in having those expenses reimbursed unless a unit of service target was met. In that example, it would not come out to zero because if we recorded income based on the units of service, that might not match our expenses. So I think that's very important. And those of us that have Head Start and have also been running a separate child care component that has a fee basis on it, or even the state subsidy programs that exist in many states, we already know that that's what happens in child care, that if the payment is on a per unit of service basis, it often does not cover all the expenses. So I think one of the challenges challenges that's emerging in community action is it used to be true that all we had to do was correctly spend down the expenses of each award, and we would be guaranteed that award's income, so it would always come to zero. Today, I think the problem some of us confront is that some of our awards do not cover all the expenses, and we have to have other funding sources to cover them, and sometimes we aren't bringing in those unrestricted funds as fast as we're charging up those unrestricted expenses. And the other emerging problem is that as funders switch to some form of performance or unit of service as a basis for saying that we've earned the income, not every award does come out to zero. So because of that, I do think net income is an important measurement. I think cash is always an important item for an indicator, for graphing, for talking about. And again, now this is where in the community action community we do have some differences. And those of us that really get everything directly from the feds, cash is not so much of a problem. Those of us that combine some direct federal programs with a lot of programs that are reimbursement-based, cash is a big problem. Do we have another one, Cashin, or is that it?
We did have one more, a little quicker here. Who exactly should provide financial oversight training to the board?
Oh, good question. I would say you may find that your auditor is willing to come in and do it. There might be a consultant in your community who can come and do it. You may ask your auditor to suggest consultants in town who can do it. You know, I think this is so frustrating, but I think there are ways that boards listen better to someone other than their executive director and CFO. And maybe things you've been telling them for years and they just are not hearing, so I think it often helps. Now, we over the years at the partnership and at CAPLAW have done some trainings that are targeted to the board that are recorded, and so it may be possible to use some of those recorded training tools. But honestly, I think the most useful trainings are sitting together with your own financial statements and letting the leader go through those statements and help people understand what's on those reports and what the areas that they need to pay attention to are, and really helping with this distinction between board and management role. Because so often I find people who have been on boards of small organizations where they've really had to do the management as a board. And so they've gotten down to, you know, well, how much did we spend on supplies in this program? And when we get into the size of most community action agencies, that's a management responsibility, and the board needs to sort of lift its eyes up to the more significant financial health indicators.
All right, then. Well, that is all of the questions I see at this point, though, of course, you are reminded that you can send them in after the fact, and we will get those answered. And with that, are there any closing words, Kay?
Well, no, I just want to wish you luck on this whole endeavor, and those of you who have been in the field a long time know that this is an area where incremental change, if you're not happy with the format you have now, you can make some improvements, but next year you're probably going to make improvements again. The great news is that our accounting software is really improving, and now virtually all the major systems that are adequate to handle all the grant accounting and cost allocation, all the other stuff we do in our systems, almost all of them now have good report writing tools. So if you haven't thought about improving the format for your display in the last few years, I really urge you to talk to your software vendor about what new tools they have, or even bring in a consultant, because so often this has been that we always presented it this way because that's what our system would spit out. And now most of us really are going to find there's more flexibility. So that would be my hope, that you'd be inspired to make some changes and then get some help to make them as easily as possible.
All right then. Well, thanks everyone for your time and attention today. And with that, have a fantastic rest of your afternoon.
Thank you.